cable properties, CNN, TNT, TBS, not included in this deal with Netflix. What's going to happen to them?
Yeah, so they are going to get spun off into a separate company called Discovery Global. This is just the TV networks business. So as you pointed out, CNN, TBS, TNT, all of that's going to be spun off by mid-year. Actually, the deal should be done by the third quarter of 2026. And so you have Netflix that is just acquiring the studio and the streaming properties of Warner Brothers.
Now, Geetha, just kind of thinking forward, right? What's to happen to this spun off company here? I mean, do you think that really paves the way for further consolidation in this industry on the network side of things?
It absolutely does. And I think that was the initial thought that Warner Brothers Discovery had when they announced kind of this whole strategic decision to split the two units. They knew that majority of the value will be with the streaming unit, that it would sell like hotcakes, which is exactly what happened. But then with the TV networks business, that is a business that is in secular decline. I mean, we've seen EBITDA, advertising revenue, affiliate revenue, all under constant pressure. But the reality of the situation is that it still generates a fairly good amount of cash. I mean, it's a cash generative business. It will throw off about $5 to $5.5 billion in EBITDA, even in 2026. So yeah, it is a melting ice cube, but the idea is you have to manage it properly. And so what do? You have to potentially combine it with somebody else.
And to that point, Michelle, I want to ask you, since you're sort of looking at this through the M&A lens, we know that Paramount was interested in buying the entire company. If what they can get out of this is CNN, maybe the other properties like a TNT and a TBS, do you think there would be interest there? Would that make sense?
It's a really good question, but especially during the last few weeks and months, it's become clear that the prized asset that people see here is the studio and the streaming. And so Paramount was really interested in that. It thought it had an advantage in that it could go after the whole thing. A lot of these companies have been trying to separate out their cable networks because they're declining. So we'll see if that's how they pivot. But I don't even think, this might not even be the end of the story or the saga for Paramount, because
good point.
Yesterday a letter came out that they'd sent to Warner Brothers basically accusing them of running an unfair process. Seemed like they might be laying the groundwork to potentially come in, go hostile. TBD on whether they will do that. If they were to do that, or if Comcast, the other bidder, were to try to come in with a counteroffer, they would have to pay $2.8 billion of a break fee to make Netflix or Warner Brothers whole, basically. And then, of course, some premium on top of what's already on the table. So there's just a lot that could still come out.
It's not the end of the story by far. And there is a report today that says that Paramount is considering going straight to shareholders now. So we'll see if that actually happens.
Yeah, Michelle and I were just talking about this just before the show. We have an 18-month road ahead of us, right? So apart from, the potential for other bidders coming in with better offers or going hostile, as you say, what other kind of potential hurdles that we might see here, particularly on the regulatory side?
So that's the big one. It's the regulatory hurdle. The big question is, how are regulators going to weigh in on this? Do they think it's anti-competitive, or do they think it's good for consumers, as Netflix is arguing? The big question that we will be looking into is, how are they going to define the market? Because if the market is defined as purely streaming, then maybe, Netflix, the king of streaming, buying HBO's Max, looks like they're going to be very dominant. But if you zoom out a bit and look at overall TV viewership, Google's YouTube is actually the top, has the top share, 13% of viewership. And the two combined, I think, get it right there at a place where it competes with Google and Disney. So we'll see. It'll all hinge on that.
Geetha, what's your take on antitrust concerns here? And do you think that this is going to pass muster, or might these companies need to get rid of some things, make some concessions?
Yeah, totally agree with what Michelle said. It's really going to come down to how they define the market, because Netflix has always argued that it just does not compete with an Amazon Prime or a Disney Plus. It really competes with YouTube, with all of the social media platforms. And you think of the amount of time spent on, a Reels or a TikTok or YouTube Shorts. This is where the world is headed. And so Netflix could very easily say, or put the argument forward, that it has to compete with all of these different platforms, and you can't just narrow the scope But they are saying all the right things so far, right? One of the big concerns, apart from, of course, the streaming dominance with the number of subscribers, is about their whole stance on theatrical releases. So from the get-go, they have vehemently opposed having movies in theaters. They've always kind of advocated for this day and date release, putting movies straight to the streaming service. And so now this seems like a little bit of a departure when they are saying they're committing to actually continuing to support Warner Brothers releases or movies in theaters. We'll see how far that actually goes. So far, they're saying all the right things. They're saying that they'll continue to release the movies. So they're basically assuaging, Hollywood content creators, the labor unions, the theaters. But again, I don't know if everybody really fully believes Netflix. The other thing to consider is the licensing part. So remember, Warner Brothers Studio, of course, they have all of these theatrical releases, but 40% of their revenue actually comes from licensing. Think of, Ted Lasso on Apple TV or Abbott Elementary on ABC. Those are all Warner Brothers shows. And so the big question now becomes, they are a huge content supplier. Is Netflix actually going to restrict that supply of content? Because then that becomes another potential regulatory issue. Again, so far they're saying they're not going to do any such thing. TBD on what actually happens.
Now, Alexis, we promised to cover all angles of the story, right? So I want to ask Michelle, actually, who are the big winners in this deal of the year in terms of the executives who are probably going to get big payouts from this?
So, the winners would definitely be Warner Brothers. They're looking, and its execs, they're looking very good right now. The stock has gone up a ton ever since they even announced earlier this year that they were going to be potentially splitting themselves in two. And then there are some banks here that are actually some clear winners. We saw Wells Fargo helping to arrange a $60 billion bridge loan to help Netflix finance this. That's one of the biggest bridge loans of all time. And Wells Fargo is actually contributing the most any single bank has ever contributed for something like that. And so we saw Wells Fargo, Evercore, Allen and Company, Moelis, they all jumped in the league tables. So when you're coming to the end of the year, bankers are all focused on what their bonuses are going to be. And I'm sure they're all seeing themselves as winners right now.